What's going on, guys? This is Foresight Capital, and today I want to talk a little bit about the bull case for NIO heading into earnings on Tuesday afternoon. So currently it's after market hours on Monday afternoon, and NIO had a pretty big rally this afternoon. In fact, if we take a look here at the one-day chart, when we opened up this morning, we opened up pretty substantially down, and I thought maybe this was going to be a little bit of a trend reversal. So at open, we were at 41.12, and then the bulls really took a hold of the stock this afternoon and pushed it up above $45 per share, up over 2% throughout the trading day. And in after hours trading, we're now seeing the stock trading above $46 per share. So yesterday I made a video about if I were trading NIO into earnings, I would personally be short, but I'd want to be short a little closer to the $50 per share range with a stop loss of somewhere in the 54.20 range, which is the recent all-time highs, where I'd want to get out before a big run could happen. Alternatively, I would look at selling credit spreads in order to receive some premium and ultimately risk or limit my downside risk. But there's a bull case being set up here as well. In fact, if we take a look at the 1 hour chart this afternoon, we had a little bit of a double bottom from Friday's price action. Now, it may be too close together to call a true double bottom, but we did see it test Friday's lows and then trend up all afternoon here, breaking above not only the 9-period moving average on the hour chart, but also the 50-period moving average, both of which are bullish. If we take a look here at the 4-hour chart, we see similar price action. So if we zoom in a bit, we had a little bit of a double bottom, a pickup above the 50-period moving average that we didn't close below at all on the 4-hour chart, and we're trading back above the 9-period moving average. Also bullish here is the one-day chart. So if we take a look and zoom in a little bit here, we'll see that throughout this entire trend, we haven't really had a close below the 50 or the 9-period moving average, except back in September 24th. And then ever since then, we've always closed above the 9-day moving average. And we had a big dip below, looked like it could have traded below this, but in the end, ended up trading above the 9-day moving average. So all of those are bullish setups, technically speaking. And if we actually pull up a Fibonacci retracement here and then take a look at something like the 4-hour time frame, zoom in a little bit here, we will see that ultimately, if we call this the trend low, let's see if we can zoom in a little more, we've got some more resistance to deal with here at the $47 level or so before really seeing a breakout. This $47 level, you can't see it, is actually the 50% retracement line. So if we could break above that tomorrow before going into earnings, at least technically speaking, this should lend to filling the gap between 47.34 and 54.12. And it looks sort of the same on the 1 hour chart. So we'll need to actually zoom out just a little bit here and then kind of zoom back in. And we'll ultimately see that the same thing's going on here. 47.34, we've got the 50% retracement that could be a little bit of resistance. And then after that, you could realistically see a gap fill for a $54 plus spike. Now, what I think we need to see in order for that to happen is, if we refer back to the video yesterday and to the Citron report, we'll start with the Citron report. So there aren't really many short sellers. People are kind of staying out of the way of this one, and that's smart, because when you've got stocks that are running like this, you really have to watch out, because they can run forever and not really have any sort of fundamentals to back it up. In fact, I don't think that there's a lot that's happened. If we zoom out here, not at the 1 hour chart, but the 1 day, not a lot has happened since back in August when they had their most recent earnings report. And the stock has gone absolutely berserk since then, up over 300%. So it just goes to show that short sellers are kind of staying out of the way of this one. And it makes sense, because the stock, again, is likely going to have revenue increases, is likely going to have profit margin increases, but nothing in the 300% range for year over year, quarter over quarter. Although I have seen some analysts say that possibly 300% increase in revenues is possible. So it could be warranted only if the overall earnings per share are keeping up with basically the top line revenue growth, meaning if they're keeping costs the same and not losing any sort of efficiencies due to just the level of volume that they're producing, I could see both earnings per share and top line growth growing about 300%, in which case this move could be warranted. But again, not a lot of short sellers, so there aren't really any short squeezes happening. That lends us to believe as traders that a lot of this volume and a lot of this open interest in buying is coming from smart money and from retail traders who can really run this thing pretty far. So at this point, NIO is into the multiple billions in market cap, but still has the ability to run. There's a lot of buying orders and a lot of people willing to step in. So again, if we get some volume behind this thing, realistically, I think if we close above 47.34 right before earnings, we could see that gap filled through earnings. What do I think needs to happen in order to fill that gap entirely? I think that they need to beat top line revenue, and I think it needs to be somewhere in the 200 to 300% quarter over quarter growth range, which some analysts think it could be. And I also think that we need to beat earnings per share pretty handily, because if we go back here and we open up the one-day chart and we zoom in a little bit on the recent earnings, again, this was an earnings report where revenue was beat, earnings per share was not, and we had a big down day. And if we scroll back to the next previous earnings, this was one where both revenue and earnings were beat. And we didn't see a whole lot of movement on that particular day, but we saw a run-up start, a pretty substantial run-up starting thereafter. And then if we go back to the previous earnings report, we did see a gap up and then a major move the next day. This was when they beat both earnings and top line revenue. And of course, those aren't the only two things that go into people analyzing earning reports, but in the end, they're the most important for a company like this because they need to show that they're not bleeding through cash. As we all know, they've got the backing of the Chinese government, and in fact, I believe they were lent something to the tune of $1.6 billion not very long ago. And so they've got the ability to raise funds and offer secondary offerings, but I think at this point there's a lot of dilution risk where if they don't show that they're earning and making a profit on their earnings, and there's any sort of investor sense that there would be a secondary offering and that their shares could get diluted, I could see this just as quickly reversing course. So again, technically speaking, tomorrow we'd really want to see a break above 47.34 range and ultimately a close above that. If we see any sort of reversal, we can start talking about a bear case again, where potentially we head back down to this 41.50 level, or even a little bit lower, maybe even down to the sub 40 level. So again, this is what I would want to see tomorrow as a technical trader heading into earnings. Again, I'm ultimately, if I were to take a position, probably would be a short position. I really can't see myself trading this long currently, just given how bloated the overall run-up seems. But I know there are a lot of bulls out there, and it's never smart to be playing against these bulls. I mean, if we zoom out to the one-day chart here again, just to kind of take a look at the absolutely insane price action that's gone on. Let me just go ahead and remove this Fibonacci. We can see that we're up from under $2 per share to over $54 per share and still trading at about $45 per share, all within a year. And there's really been no sustained periods of downward movement. If we see back here in the March range, we did see a little bit of downward momentum from 5 to about 250. So it was a 50% haircut, but it was very temporary before basically a 2,000% run up. So again, personally, if it were me, I would be short, but I'm not going to be short on this sort of stock until 50 or higher so that I can get within a 10% downside range. Essentially what I'm looking for if I were shorting would be somewhere above the $50 range with a stop loss of 54.20. And if I have that basically gives me an 8 to 9% potential loss, with my downside realistically being in the 40 range. So that would give me a 2-to-1 risk to reward ratio where I'd be willing to lose about $4 per share, but realistically would make a good bit over $10 per share before I would ultimately cover all of the short sold position. So just that would be my personal play, but let me know down in the comments which way you think you might play this. Again, I think there's a bull case definitely to be had, and I wanted to make this video to kind of counteract the video that I made yesterday where I was a good bit bearish on the stock, and personally I still would be if I were trading it, but let me know your thoughts. Are you going to be long into earnings? Are you going to be short into earnings, or are you not playing them at all? Curious to know. Thank you all for stopping by. Don't forget to subscribe, and catch you in the next one.